Something strange has been happening in the silver market. While most investors were watching interest rates, inflation data, and stock market volatility, one of the most powerful banks in the world was quietly making moves behind the scenes. Moves so large, or so strategic, that many analysts now believe a single institution may have gained unprecedented influence over the global silver supply. That institution is JP Morgan Chase. For years, whispers about their role in the silver market circulated through trading desks, mining circles, and financial forums. But recently, something changed. New data, new market signals, and a massive accumulation of physical metal are forcing investors to ask a disturbing question. Did JP Morgan just take control of the silver market? And if they did, what happens next? Because when the biggest banks position themselves in precious metals, history shows something big often follows. To understand why silver suddenly matters again, we need to zoom out and look at the bigger economic picture. Over the past several years, the global financial system has entered a period of extreme uncertainty. Inflation surged across major economies. Central banks aggressively raised interest rates. Government debt levels exploded to historic highs. The institution at the center of the global monetary system, the Federal Reserve, pushed borrowing costs higher in an attempt to control rising prices. But even with higher rates, inflation hasn't fully disappeared. Meanwhile, geopolitical tensions continue to reshape the global economy. The conflict between Russia and Ukraine, growing tensions between China and the United States, and the rise of alternative economic alliances have created a new era of financial fragmentation. In times like these, investors traditionally look for safety in tangible assets. And historically, two metals have served as monetary anchors during periods of instability: gold and silver. But silver is different. Unlike gold, silver is both a precious metal and an industrial metal. It is used in solar panels, electronics, electric vehicles, and advanced technologies. That means silver demand is tied not only to financial fear, but also to global industrial growth. And that's where the story gets interesting. Because while retail investors debate whether silver is undervalued, one bank appears to have been accumulating it on a massive scale. For decades, the silver market has been dominated by large financial institutions trading futures contracts. These trades happen primarily through the COMEX, the main futures exchange where silver contracts are bought and sold. Most of these contracts never result in physical silver delivery. They're financial bets, paper silver. In fact, the amount of silver represented by futures contracts often exceeds the amount of physical silver that actually exists in vaults. That means the price of silver isn't always determined by physical supply and demand. It's heavily influenced by derivatives trading. And that's where JP Morgan enters the story. Over the past decade, JP Morgan has quietly become one of the largest custodians of physical silver in the world. Through its vaults connected to the COMEX system, the bank has accumulated hundreds of millions of ounces of silver. Some analysts believe it could be the largest private holder of physical silver on the planet, but the story goes deeper. Years ago, traders and whistleblowers accused major banks of manipulating precious metals markets through coordinated trading strategies. In fact, in 2020, JP Morgan paid nearly $1 billion in fines after U.S. regulators found evidence of market manipulation in precious metals futures. Specifically, traders used a practice known as spoofing. Spoofing is when traders place large fake orders to influence prices, only to cancel them before execution. This tactic can create artificial market movements that benefit large institutional traders. While the bank settled those charges, the broader question remained: why would a bank accused of manipulating silver prices also accumulate enormous amounts of physical silver? Some analysts believe the answer is strategic positioning. Because if the paper silver market ever loses credibility, physical silver becomes incredibly valuable, and whoever controls the largest supply gains enormous influence. Over the past decade, JP Morgan's COMEX vaults have reportedly stored more than 1 billion ounces of silver at various points. To put that into perspective, global annual silver production is roughly 800 to 900 million ounces. That means a single institution may have controlled an amount approaching an entire year of global mining output. This accumulation happened slowly, quietly, almost invisibly to the average investor. Silver prices remained relatively suppressed during much of this period, but the physical metal kept flowing into vaults. Many market observers believe this strategy mirrors what powerful financial players have done throughout history. First, they accumulate assets quietly while prices remain low. Then, when the supply becomes tight, the market dynamics change dramatically. And when that happens in commodities, prices can move very fast. Today, the global silver market is facing a new set of pressures. First, industrial demand is exploding. The global transition toward renewable energy is increasing demand for solar panels, and silver is a critical component in photovoltaic technology. Countries like China, the world's largest solar manufacturer, are consuming massive amounts of silver to support their energy expansion. Second, electric vehicles require silver in their electronics and power systems. As EV production increases worldwide, so does the demand for this metal. Third, geopolitical shifts are changing how countries think about monetary reserves. Nations like China, Russia, and members of the BRICS alliance have been steadily reducing reliance on the US dollar. Instead, they are increasing their holdings of tangible assets, particularly gold. Silver, while less discussed, often follows gold during major monetary transitions, because both metals historically function as alternative stores of value when confidence in fiat currencies weakens. At the same time, demand is rising. Silver supply is becoming constrained. Unlike gold, most silver is produced as a byproduct of mining other metals like copper, lead, and zinc. That means silver production doesn't increase simply because silver prices rise. If base metal mining slows due to economic conditions, silver supply can drop even if demand remains strong. Recent industry reports suggest the silver market may already be experiencing structural deficits. In other words, more silver is being consumed than mined. If that trend continues, physical inventories could shrink rapidly. And if a major holder already controls a large portion of the available supply, their influence over the market becomes extremely powerful. So what happens if these trends continue? There are several possible scenarios. First, the silver market could remain relatively stable. Industrial demand might grow gradually while new mining projects slowly increase supply. In that case, prices could rise steadily but without dramatic spikes. But there is another possibility. If global financial instability increases, if inflation returns, or if investors suddenly rush into precious metals for protection, the physical silver market could face a sudden demand shock. Remember, the silver market is much smaller than the gold market. That means large inflows of capital can move prices very quickly. And if physical inventories are already concentrated in the hands of large institutions, those institutions could play a major role in shaping market outcomes. In extreme scenarios, a physical silver shortage could develop. If investors start demanding actual metal instead of paper contracts, the futures market could face pressure. And when paper markets collide with physical scarcity, volatility often follows. But perhaps the most important question is not whether JP Morgan controls silver. The real question is why such powerful institutions are positioning themselves in precious metals at all. Large banks have access to enormous amounts of financial data. They see global liquidity flows, sovereign debt trends, and central bank activity long before the average investor. When institutions with that level of information begin accumulating physical assets, it often signals deeper shifts happening within the global financial system, shifts that may not yet be visible to the public. So now I want to hear your perspective. Do you believe large banks like JP Morgan are simply participating in the silver market like any other trader? Or do you think something bigger is happening behind the scenes? Is silver being quietly accumulated before a major shift in the global monetary system? Or is this just another cycle in the commodities market? Let me know your thoughts in the comments below, because some of the most interesting insights about markets often come from conversations between informed investors. Throughout history, major financial transitions rarely happen overnight. They unfold slowly, quietly, often hidden beneath layers of complex market activity. By the time the public fully understands what's happening, the biggest players have already positioned themselves. Silver may seem like a small market compared to stocks or bonds, but in times of monetary change, even small markets can become incredibly important. And when powerful institutions begin accumulating physical assets while prices remain relatively low, it raises an important question. What do they see coming that the rest of the world doesn't? Because in the global economy, the most valuable information is often hidden in plain sight. And sometimes, the biggest financial stories are the ones no one is paying attention to, until it's too late.